Hi, can you hear me okay? Okay, great. Excellent. Let's get started then. Welcome everybody to the webinar. My name is Walter Peters, and you're here at the Naked Trading webinar, where we're going to talk about trading without indicators. I don't know if that's necessarily something that everybody watching this and watching the recording and here live, if that's something that you do, but I will say this. It's easier to blame the system when you have indicators than it is when you're just looking at price. In other words, when you have a losing streak, it's easy to kind of scrap it, throw it away, and forget about it and blame all that on the system when you're using, a moving average RSI and ADX, crossover or something like that. When you're looking at pure price, it's often difficult to get away from it because you're always going to see pure price. You will always see price, no matter if you move away from a particular price-based system. And that's what we're going to talk about today. We're going to talk about a very simple system. It's using a chart that almost nobody uses. I don't know why either. I love this chart, and I love using this system. It's kind of a catch-all system, and it's really fun to trade. It takes a little bit of getting used to, especially if you're used to trading with candlesticks or indicators or whatever. It does take some. There is sort of a process to get to the point where you can say, okay, I understand now, I get it. But I think we can get there today. So if everyone ready to roll, let's do it. I'm excited. So let's go. All right. This is called the forgotten chart. Okay. And it doesn't really matter which chart we use. If you guys have a particular chart you'd like to use, we can use it. But what I like about this is it works on any chart. And let me show you kind of how it works. Unless someone objects, maybe we can use the Aussie CAD. All right, let's do that. Actually, I'm going to use a clean chart because I just took a trade on the Aussie CAD. So I'm going to use like a clean Aussie CAD chart. Okay. So if you're looking at candlesticks, it'll look something like this, right? Well, if you are looking at a line chart, it's going to look like this. And on MetaTrader, you would just click on this button right here, which is right next to candlesticks, or hit Alt+3, and you'll see a chart that looks a bit like this. Now, all a line chart is it's simply a 1 period moving average on the close. So what you see here is a line that links up all the closes, right? And I like to use this chart when I'm drawing my support and resistance level. So I use horizontal support and resistance. You can use trend line support and resistance too, but I really like horizontal support and resistance because it's easy for a lot of traders to see it, and it becomes kind of like a self-fulfilling prophecy a lot of the time. So I'm cool with that. And then like this. So all I'm doing is I'm drawing these zones in where the market has repeatedly bounced off of it. Now, ideally, the market's going to bounce off from the top and the bottom. So it's going to find, so for example, right here is a good one. So this level was support back here in July of 2016. The market came down to this 97.40 level on the Aussie CAD and found support. And then later on, when it broke through the end of 2016, it came back up and touched it again as resistance right there in December 2016. Okay, so that is your support and resistance zones. All right, so let's talk about the system. So an example of what this system, a trade for this system would look like would be right here. I'm just going to put a little circle around it so you can see it. This is in essence, an example of that right there. So when the market comes down and gives a really strong bounce, what we're looking for is we're looking for a chart that looks a lot like this. So I'm going to hit the F12 key here and advance one candle at a time. That's it right there. So that's the trade, okay? So I'm going to mark it with an arrow. It's right there. So after we see this part right here. So essentially, what we're looking for is a really sharp turn, a movement in the line chart. And the only way you're going to get that is when you have a close strongly in one direction, because remember, we're linking up the closes here. And then immediately after, the next candle is going to give you a really strong close in the opposite direction. So I like to play these off of support and resistance, as I did this week on the Aussie CAD daily chart right here. I'll go and show you my trade, but the reason why I want to highlight this example is because it's a great example of the system we're talking about today. It's an excellent example, in fact, of the system we're talking about today. Now, I want to contrast this really sharp looking line here versus the one over here, which is not so sharp looking. And why is that the case? Because the market closed right there. So I can tell just by looking at this, even though I don't have my candlesticks up here, I can tell what happened is we had a really kind of a bullish candle, because there's a few bullish candles here, it looks like. And then it closed right there on the zone, and then it closed there on the zone again, didn't really move much, went slightly down on that close, and then it finally started to fall off after like 2 or 3 candles. It looks like it started to move. So it spent several candles up here before rolling over. That would not be a trade. This is a bad example. This is not the kind of trade we want. So even though it went down here, the kind of trade we want is the one over here, where it gives a sharp movement because one candle down and one candle up, or vice versa. It doesn't really matter. The point is, you'll see these when the angle is really sharp. So this is not a sharp angle. And if I go to the candlesticks, you'll see why. So there you go. So here's the 2 bullish candles I was talking about that you can see there on the line chart. And then I'm going to get rid of this arrow because I don't want it to confuse. It's just that was when we were drawing the support and resistance. Oh, look, there's a little kangaroo tail right there. But we got 2 strong bullish candles. Then we have 2 candles that stayed up here. And then finally it started to fall away. So this does not qualify, whereas this setup over here does. All right. Is everyone clear on that? Does that make sense? The reason why, here, let me type in my name here. I don't know if I, okay, cool. I just want to make sure I was in the chat box. Yeah. Okay, cool. The reason why we want a really sharp line here, angle, is because we want to get into these with momentum. So we don't want to enter these trades where, you know, we're kind of like languishing around. And the other thing is, if you look, like, for example, if you look at a trending market, what you'll often notice is that the market, like the S&P 500, and actually even the Aussie CAD on the 1-hour chart's a good example of this. The pound to some extent, maybe the euro, Aussie, or Euro CAD. I think it's Euro CAD, not Euro Aussie. But you know, these charts, Singapore dollar to some respect, they look something like this, where the market goes and then it kind of consolidates and rests a little bit, and then it goes again, and then it'll rest again right here, and then it'll go up, and then it'll rest again, and then it'll go up again, and then it'll rest, and then it'll go up again. And so you can see right now, what are we in? We're in a resting phase. So if I am trying to find the turning point in the market, and if I'm in the midst of a really strong trend, the kind of lines that I see, the kind of bends that I see here are going to be kind of these blunted, sort of half-hearted bends in the line chart, and they're not really going to be very dramatic. And what we're looking for are these really dramatic, sharp bounces like these down here, and not kind of these like half-hearted bends. We want to pick the sharp movements like this. Like this is a good one, right? That would be a great one. You can see it closed there. Here, let me back that one up because that was a good one. You can see what happened on this one was it, I think we were looking at this one. Yeah, it closed there, it went lower, closed there, and then it went wham and closed all the way up here, I think. Yep, so it closed there, and then wow, it closed all the way up there. It was kind of a gap. But those are the kinds of moves that we're looking for. We're looking for those really sharp bounces. So if you're in the midst of a trend, you're going to see these kind of weak-looking turning points. Not all of these. See, all of these here, all these bends here are pretty weak. They're not very sharp. They're not very strong-looking. And the reason why, of course, is because we don't have much momentum to the downside. When we get into these consolidation periods, all the market is really doing is just flatlining. That's it. So, all right. So let's go back to our Aussie CAD here and set up the rules for this, because I know for some of you, you're going to be like, well, okay, that's great, but how do I trade it, right? That I understand what you're saying. You're looking for a really sharp move, a really sharp turn on the line chart, but that doesn't really help me trade it. Okay, fair enough. So the way that I trade these is as follows. I look for, first of all, I do exactly what I've done here, which I draw my support and resistance zones on the chart. Once I have those, I know where I look, where I want to take trades. I want to take these trades at those spots on the chart where the market is repeatedly bouncing, right? That's what I want. I want to find a sell or a buy off of a support resistance level. So once I find these, then I wait for the market to hit one and give me a really sharp looking movement, which is what we had here. So this bullish candle here, because it closed so strongly in the opposite direction, it got a really strong bend. And that's what I call these bend trades. That's what I like about, that's what I call about these, because I like the way that it bends really strongly on the line chart and shows me that the market's bending and it's going to start going the other way. And by the way, most traders prefer to trade these sorts of setups. Most traders don't like to trade with the trend where they see a really strong trending market and they just kind of hop on it. Most traders don't do that. They look for the reversals. Now, you can trick yourself if you're a trader who likes trading reversals, but you want to take advantage of the strength of the trend. You can simply get in on those retracement moves that are against the trend and kind of, you're almost kind of like mind tricking yourself into trading a reversal when really it's just a reversal that's going to hop right back onto the trend, or at least you hope so. So you can do that too. So in this case, what we have here is have a really nice, strong bend. And the way that I trade these bend trades is I put my buy, like for example, this one, because we know it's a buy order because it's the strong bullish bounce here. The buy stop goes above the candle that made the bend. So in this case, this candle here, it's a daily Aussie CAD. The high is 101.16. So I could put my 5-6 pips higher, 101.22, for example. 101.22. Okay. All right. So 101.22. And then let's see what happens. I'll hit the F12 key. Boom, you can see it triggered. It blew through this level right here. And now, of course, the line is going to look even stronger, sharper move. And that's kind of, you know, what we hope to see here. It's not always going to be the case, but that's what we look to see here. Obviously, the stop loss, I put that down here below the low of this candle because that's the lower candle. So that's at, well, you can put it right on the low, really, 1.0028. 1.0028. is the stop. And now what about targets? Well, you might target a zone up here or a zone up there. You might put a trailing exit on it. You might do both. You might go by reward to risk. So if you go, well, I've got about 100 pips risk on this one. It's actually a little bit less than that. I think it's 94 pips, if my math is right. I've got 94 pips of risk on this trade, so I'll go for 120 or whatever. That's the kind of thing. And here's, you can see yesterday it went up too, and today we're just kind of stuck at this support and resistance level right here. We're just kind of stuck right against that so far. And we don't know. I mean, London's starting to trade, so we don't know what's going to happen. But that's basically the idea here. All right. So are there any questions about this? Does this make sense, what we're talking about here? You're just looking for a really sharp bend on support resistance. And then we get in on the other side of that candle that made the bend. If it takes several candles to push off of the zone, it's no good. So this is no good. The one in the circle right here, which is gray, that's crap. That's no good. I don't like it. The orange one, woohoo, yeah, very excited. That looks great. So that's the kind of, that's the kind of move that I would say, yes, that's what I'm into. I'm into these really strong bounces off of support and resistance. Now, as for this trade, just to follow up, so this was a buy actually at 101.45 for me. And the reason why was because it was a little bit higher because the Asian session, if you go back here and look, the Asian session actually went up this day. So I waited for the market to actually clear this high. So I got in over here on this candle. And then I also talked about this for people that watch my trade updates. We were looking at a reason to get in on the pullback here. And this was a 1 hour entry too, so the original entry had, 120 pips of risk or 90 pips of risk or whatever it was, depending on your entry. And then this one actually had 23 pips of risk. And it's up 101 pips at the moment. So it's definitely 4 to 1 at right now, in terms of R. R being how much do you risk. So it's up 4R. And, so far, this is a really bullish pattern. If it sits here, even if it just closes like this on the day, that would still be very bullish to me. And I still think that it will probably hit target 1 and possibly even target 2. So I've got 2 targets on this one. But some traders might put a trailing exit or something like that on it. So that is an example of an Aussie CAD bend trade right there. Now let's talk about another one. Let's pull up another chart at random. Let's go yen and 30-minute chart. And let's see if we can find... Oh. Got some indicators on here, which isn't very cool. Oh, this is awesome. All right. Well, first of all, what's clear to me about the yen is this is a really bullish breakout pattern, right? Like really bullish. So I like the look of that one for sure. But that was on the 30-minute chart. So let's see if we can find any bend. Well, here's kind of a good one. This is another, actually, this brings up a good point. Sometimes you will see these as double tops and double bottoms. And as long as the second touch is a really strong one and got a really strong angle on it, that's a viable bend trade as well. So here we have where the market fell down, it kind of flatlined there and then went up and then fell back down again and sharply bounced. So that would be a bend trade right there. Now, I just want to be clear here. For me, that would not be good enough right there. Like, it's good. I mean, it's nice to see it like that. But because the close isn't above the previous candle's high, I would wait another candle and just confirm that we're going to bounce hard and you get it there. Now, I know that means that the stop is further away and people get all uptight about that, It's interesting, what I found from working with a lot of traders is that most traders have their initial stop too close and if they're using some sort of discretionary exit or trailing exit, they don't give their trade enough room in the beginning, and they give their trade too much room at the end. And if you just could flip that would really help out, where you actually give your trade more room in the beginning and then less wiggle room in the end when you get out. That's actually a better situation for most traders. Most traders should kind of think about that. But anyway, I just thought that was something to talk about. Maybe you've noticed that in your own trading. So here, this high on this trigger candle right here is at 112.94. So that might mean a buy, on a 30-minute chart, maybe 3 pips higher. So 97, 112.97 would be the buy price. And then we would say, okay, the green is the buy. What's the stop? The stop's going to be down here below the low. That's 112.54. We'll make that red because it's the stop. Just make everything clear. So stop from 54 to 97. That is, what is that? 43 pips of risk. So maybe I will go for like this target up here, this little zone of resistance up here, because that would give me 74 pips, right? So that'd be a nice first target. So we'll put that up there. Actually, this should be green. So what I like to do is have my targets green, my entries are blue, and my stops are red, just so it's really clear. So there's an entry right there, okay? Entry is at 97, target's at 74, and the stop is at 54. So let's see what happens here. We hit it. Now, what's interesting about this is that if you had moved to break even when it got up here in this area, you go, well, it's almost to my target, or halfway there, or 60% of the way there. It's 61.8% of the way there. I'm going to move to break even. Then you would have been stopped out at break even. But if you would have left your stop in place, you would have hit target 1, and maybe even, let's see if there's a target 2 here. No, yeah, target 2 would have been hit too, with a little bit of patience of a couple days. And then probably, target 3, if I had one, would have been here, and that would have been hit as well. So that was a really lucky trade that it went that far. They're not all going to go that far, obviously, but this zone, obviously, on my chart, that was from like a daily chart. So it's a really strong zone that it bounced off of, which is to me, that's kind of the best way to trade the lower time frames. I don't do a lot of lower time frame trading, but if you were to do that, you definitely want to go with the really strong zones if you're gonna play those. At least that's my thinking. So does that make sense? All good with that? Yeah. So basically, let's write down the rules. The important things about the bend trade are as follows. One is you need a sharp angle. So that's going to mean a really strong close. If you don't have a sharp angle, it's not a bend trade. It's something else. Number 2 is the order is above or below your trigger candle, right? And you're playing off of support and resistance. Trades are on support and resistance zones, right? So there you go. So that is kind of the idea here. So you're only going to get a sharp angle if your trigger candle is closed really strongly in the direction, against the zone. In other words, it's really moving away strongly from the zone. And what this bend system takes advantage of is this idea, this concept that when the market breaks through a support and resistance level, it will often bang its head against it quickly over and over again, and then it'll finally break on through to the other side, to quote Jim Morrison. So, for example, this, this 1 hour, I think it's a 1 hour. Yeah. Well, I don't know. Yeah, 1 hour is probably the best way to see it. This 1 hour yen chart here, where the market's going, trying to get through, comes back to the trend line, can't get through, comes back, keeps squeezing up against it. That is, and sometimes it'll give you a fake out. It'll throw a candle up here and then right back down and break through the support level, and it's over. And that was a false breakout. But oftentimes what I've seen in my testing and in my trading is that this usually means that it's going to break out. And the reason why it usually means it's going to break out is because it's tried 1, 2. You could even count that as 3, 4, 5, 6. 6 candles. It try to get through there, and finally it does. And that's kind of that's kind of the whole point of this, is that when the market breaks through that level, it's already told us beforehand that it was going to do that. It's already multiple times over and over again said, yep, we're going to do that. We're going to get through to the other side. We're going to take off. It's going to happen. So that's what this system takes advantage of, because we know that if it moves to a zone and then quickly moves away from it strongly and doesn't kind of hang out there, it's likely to spend time away from that zone. And that's really the principle that's in effect here. And you'll find this everywhere, guys. So here's the euro, okay? So let's see if we can find where we had a really sharp bend. There was one here. Okay, so actually, you know what? I'll point out the ones that are sharp, obviously. This one's good. This one would be bad. This one would be awful. This one would be awful. This one would be awful. Right? But the strong ones would be like, this one looks brilliant. This one's bad as well. That's bad. But this one, look at this one. Right here. Brilliant. Now, I'm assuming that all these are on significant support and resistance levels, and I don't know that that's the case. But let's go ahead and draw them in so that we know where they are. I should have done this first, actually. That way we kind of, because you're going to see a lot of squiggly lines on here, but they don't count unless they're on a zone, right? That's the whole point. If they're not on a support and resistance zone, then it's just a squiggly line. But if they are in a support and resistance zone, we can say, okay, do we have a bend here, or is something else going on? Looks like there's another one about there. So yeah, so something like, look how good this one is back here. Wow. That's a really good one. Yep. Okay, so that's a really sharp one. That one's pretty weak. It's not really, I wouldn't really say it's on a zone anyway, but I would say that one's no good because it's just kind of more U-shaped. You want more V than U. You want a V, not a U, right? That's again too wide and open. This one's not on a zone. This one actually would have been okay, actually. It looks like it would have been stopped out, but it's pretty sharp. Let's see if it triggered. Yeah, it did. So this one right here would have been fine, but it just would have been an unlucky loser right there. I don't want to give the impression this is like 100% accurate or whatever, because it's not. But having said that, this is another one over here that was good, and that probably would have been okay. That probably could have provided some profit or a break-even result, depending on the stop placement. So on this one, it looks like stop placement would have been roughly 138 pips. And from 138 pips, there was 180 on offer. So yeah, probably had an opportunity to take some profit up there. This one, however, no, because you see it would have triggered. Now, I don't know if this would have triggered during the Asian session. On a daily chart trade, I would definitely try and avoid getting triggered in the Asian session, which is why I did what I did on the Aussie CAD. Let me just see here if I can. Whoa, just lost my zone, man. That's no good. I completely moved my my zone. Whoops. Anyway, the point is, if you get in, when is that? December. Okay, I'm going to go back and look at that one in December. If you get in during the Asian session on a daily chart trade, I think it's a really bad idea. And it looks like that's exactly what would have happened here. So here's, no, it would have spiked. It spiked during New York. No, that's all right. That's a fair loss. Fair loss, fair loss, fair loss. It went about as high as it was the previous day. It didn't really break the high until New York. And so it would have triggered during New York, and then it would have been stopped out, the next day. So, okay, fair enough. That's a loss. I'm not going to talk that one off the chart and talk about why it wasn't a loss, because it was a fair and square 100% loser. All right. So again, when we're taking bend trades, the most important thing is a really strong zone, right? The second most important thing is a really strong close to give you that sharp move. And the third thing is that you kind of, like, I prefer to see the market take off and go almost immediately. So for example, in this example over here, what if it didn't trigger the trade on the first day? On the first candle, it didn't go. I would almost, sometimes I'll wait one more candle, but for a bend trade, that really isn't the deal. That's not the story that we want to see the market give us. We want the story to unfold in a way where we're going, yep, it's going, it's moving, there's momentum, let's get rolling, that kind of thing. So I would probably tend to just say, nah. Don't. If it doesn't trigger on after one candle, scrap it. I have waited 2 candles, and generally my rule is to wait 2 candles. But on a bend trade, it really makes sense only if it goes immediately. So does that make sense? Or any questions about that? That's kind of the reason why, is because the bend itself is a sign of momentum. I know you could throw up a momentum indicator on there or whatever. Where is momentum? There it is. So, like, for example, this was the example we're looking at, right? The loser. Let's look at this loser and just see what was going on here. So we're saying, yeah, okay. So we're saying momentum's up. So I'm just going to show us far right edge of the chart. So momentum's up, and we get triggered right here, and then we get stopped out. So, I suppose it would have been better over here, on the first signal, because momentum's maybe it's crossing the 50% level or whatever. I don't know. Does momentum have a 50% level? No, it's between 94 and 101. Okay, forget that. So yeah, I clearly know my momentum. I clearly know my indicators. But the point is, I'm sure you could come up with all kinds of reasons why it has momentum, or rules or whatever based on indicators. All I'm saying is that price tells you all you need to know. Remember, all of these indicators, RSI and all that, they all use the same information that you get from the candles. They just massage it a bit. They add a magic number here or there. They divide it, multiply it, add a couple of numbers or whatever, subtract this, subtract that, average over X number of candles or whatever. And they're just spitting out the same data that you can see from the candles. So, and you can go back and look at your indicators and see what's important to the RSI. What's the close versus the high? All these different indicators look at different things. Could you please tell me your Aussie CAD 4 chart is not a reversal? Yeah. Yes. Good. Great question. It is not a reversal. Okay. All right. Yes. So, okay. Kareem, are you in the private forum? If you're not in the private forum, it's cool. But if you are, go and look at Beta Trader's webinar, because that's essentially what this trade is. And we could probably do a webinar just on this idea. But the reason why this was a trade was because Beta Trader does this really well, by the way. So here is, okay, this is why this was a trade, okay? The market hits the resistance level and falls. 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 Breaks through here. Breaks through, spends some candles above resistance, which should now become support. Comes back down, bounces off of support right here very strongly. So you don't have to wait for the market to drop from a high level down to a support resistance level and find support, like down here, for example. You don't have to wait for that, which, by the way, this is a pretty okay one too. I'm not sure what the close is. Yeah, the close on this one is actually right around the high of the previous candle. So that's a good one too right there. It went and then it pulled back, but you still survived because your stop loss is down here, right? So this one, you know, just for comparison purposes, this one would have been about 140, 150 pips of risk. And so 140, 150 pips of risk, you would have been in a drawdown of 90 pips. And then 180 pips of risk is on offer up here off these highs. And then, 300 pips of reward, risk, 300 pips of reward is offered up here. But the reason why that was a trade, Kareem, was because it was a bounce off of support. So it was previous resistance that had become support, and it bounced really hard, which is really what I was looking for. If it had done any sort of messing around with little neutral candles like this or whatever, it would have been no trade. So, and so what I'm trying to get across here is you don't have to, when you trade these, this was not a bend trade. It had a bend sort of trigger, but it was really what we would call a pinch trade. It's a pinch trade. That's really what it is. It's a pinch trade. So it's a breakout and a retouch. It's a confirmed breakout. And by the way, just so you guys know, we can shift over to the live charts now if you want. I would expect a very similar thing to happen here on the yen. So this is the yen. This is the 1 hour yen chart. So it's a lower time frame, but see how it's hit, breaking out now. So I would expect it to spend some time up here, come back down, bounce off this 114.20, 114.15 level, and give a bullish candle. And that would be a very, very similar trade. And then I could shoot for, all the way up here at 115, something like that. So let's say we get let's say it spends time up here and then maybe tomorrow it comes down, okay, and bounces. We might see a candle that has a risk of, 35 pips, 40 pips. So 35, 40 pips, plus we add a few pips to the entry. You might have 45 pips of risk going for 60 pips of reward on the first target, or even further, So that's kind of the idea. Does that make sense? So it doesn't have to be just bouncing off support and resistance. You can also get a breakout and a retouch. It's kind of a different, it's a little bit different, but it's the same concept, and it looks the same on the chart in terms of the angle of the bounce. Yeah. Are there any other charts that you guys want to see while we're here? I'm happy to take a look at them. Here's an example of what kind of a similar concept, but on the Aussie Kiwi. So this is the Aussie Kiwi daily, and you can see where the market hit over here. So we know it's an established level of support and resistance. Well, now we're probably breaking out and going up. If that's the case, I would so for just to be clear, I would not count this move up and this pullback as a breakout and pullback. I would actually wait for it to spend time up here and then come back down. I don't like it when the market breaks across a zone and kind of just stays right sort of on the zone. Like, I would argue that all of these candles here, let me zoom in so you guys can see it. I would argue that all of these candles here have touched the support level. So even though it broke through the support level, they were still touching it. In fact, I would argue that these have closed below it. So if that's the case, we really need to see the market spend more time up here, more candles up here, and then settle down here and bounce. So which chart is So which chart is the forgotten chart? The forgotten chart is the line chart. Nobody uses the line chart. Let me ask you a question. It's a great question, Ambassador. How many people here have gone to a trading webinar and they talked about a trading system with the line chart? Has anyone ever done that? Oh, you're late. Okay, we'll go back and watch the recording. Go back and watch the recording because the whole first half of the webinar, all we did was look at this chart. That's it. We were looking at the line chart. The whole system is based on the line chart. So yeah. So go back and look at the recording. So yeah, the forgotten chart is the line chart. People don't talk about the line chart. Am I wrong? Am I right or am I wrong? I mean, when you go to webinars and they're talking about trading stuff, this is what their charts look like. Well, look, I haven't been there in a long time, but you know this is what they're doing. They're doing stuff like this, right? And then we'll add some, you know, what else can we do? Yeah, something like that. And then we'll add some, yeah, like, okay, it's below the 100 or whatever. You know, the charts look like this, right? I mean, this is what their charts look like. Something like this, right? Where you have like things on the chart and things down here and whatever. Yeah. So that's what you normally see. Yeah. So the forgotten chart is when we take off all this junk, envelopes, moving average, relative strength. Take all that junk off, and we just look at the line chart. So let's do another one. The bend is the reversal, exactly. So, okay, just to clarify, so my Kiwi trade finally hit the target. That was a sell up here. It finally hit 71.20. I'm waiting on the second target. My Aussie trade, I'm still holding on to, hasn't been stopped out yet. And then the Aussie CAD trade, I'm in on the daily, waiting for 102.80, but I'm also in on the 1 hour where it gave us a little home run setup, and that was a beauty. That was entered when I was sleeping. I love semi-automated trading. I love waking up in the morning and saying, "Oh yeah, I took a trade." But that one's kind of, you know, we'll see how it goes. It's 4-1 right now. We'll see if I can get 5 or 6-1 out of it. Maybe we'll see how that goes. And then gold is another one that I'm going to be taking a trade on. Right here. So if I can get it at 12.51, I will go long gold. All right. And then stop is at 12.36. And this is 12.74 and 13.05 are my targets on gold. So this is the similar thing here where, you know how we were talking about in the Aussie CAD, it spent time away from the zone, came back down in sharp bounce. But it needs to trigger. It actually already has gone higher than the bullish candle. Let me zoom in so you guys can see that. See, this candle is already triggered, but I'm just saying, I'm just being conservative. I'm saying, well, I want it to take out that high again. And if it does that, I'm in. I could just get in right now, obviously, because it's done everything right, but I'm just going to wait for it to go above that. Pound. Okay, we've got a few more minutes. Just a few, so let's go. Pound, pound, pound. Where is my pound chart? Pound's kind of a kind of re-engaged, hasn't it? Where the heck is my pound chart? Okay. I've got pound crosses, but okay, let's just do it. Pound, template. Look, here's the thing about the pound. It's going to pull back, and if you want to short it, I would tend to look for it here at 23.60 or possibly here at 23.20. So that's about 30 pips away from where it is right now. I would look for a pullback and a bearish candle. So maybe a bend off of that or a bend off of that. I think it's going lower. I think it's at least on the lower time frames. Obviously here I'm talking about the 1 hour chart and the 4 hour chart perhaps. The other thing to keep in mind though is you got this spot down here. So if I get in a sell right here, which this would be my preferred 23.60, but let's say I get a 23.20 sell off that, that's great. But remember that you've got some support that's going to come in down here at 22.50. So just be aware of that. So you've only really got something like, I don't know, what, 20 to 50 is, what is that? Is that 130? No, 80. It's 80 pips. It's only 80 pips. There's about an 80 pip move there. Something like that. Yeah. 70 pip move. The Aussie is a complete mess. I have no idea where it's going. I do know that historically a lot of traders recently have been shorting it, so it seems more likely to go up. And I'm in a bullish breakout trade from a while ago that's gone nowhere. So I don't really know. The Kiwi obviously I think probably has a fair shot at hitting my second target. So I'm also bearish obviously the Kiwi since I sold it back here. So yeah, I'm bearish the Kiwi too. It took out target 1 and we're waiting on target 2. So yeah, so I do you trade gold and silver? Yes. And I mentioned the gold trade earlier, right? Yeah. So the gold trade I like on the 4 hour. I'm in the Aussie. I'm in the Kiwi. I'm in the Aussie CAD. I think Canadian dollar is pretty weak. The yen's pretty weak, and the pound's pretty weak. So if you wanted to go with something like that, you might go with one of those weak pairs, like the Canadian dollar, or the pound, or CAD yen is another possibility. So CAD yen, if it breaks out here, like it's acting like it wants to break out, right? You could say it keeps hitting this level. Maybe it's going to break out kind of like the yen. So if that's the case, it might go all the way to 86.28. Maybe the CAD yen is going to go all the way to, to 86.28. That could be a move too. Breaks out, bounces off this sharply, and then we go all the way to there. So cool. The interesting thing about the Aussie, I will say this. The interesting thing about the Aussie is, and we know this, right? Like we know, you can go and look and see how many traders are actually long or short the Aussie. You can go to a lot of brokers will offer this information. The interesting thing is the weekly chart is actually, this is a pretty bullish, not only are a lot of retail traders short the Aussie, or at least they have been recently. I think it might have pulled back a bit, but this is actually a pretty bullish pattern to see all of these weekly candles hanging out up here at the top of this bullish one, especially when it's on a resistance zone like that. That's actually a pretty bullish sign. I know it sounds crazy. You wouldn't think that the Aussie would go higher, but that's actually a pretty bullish pattern. So it'll be interesting to see what happens. All right, guys. And the longer it spends up here, the longer it spends, we talked about this principle earlier, more and more candles that keep hitting resistance, the more likely it is to break through resistance. That's another principle. And it works on support as well. Thanks for your time, guys. I wish you a very happy trading week. I hope to see you next week. And until then, stay safe, use stop losses, and test all your ideas in Forex Tester. Take care, guys. Thanks a lot. Bye. See you. Bye.